All right, good morning. All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Let's go out and take a look at three things. Going to take a look at Disney, TLT, and we're going to answer the question: Did VLO die? Let's start with Disney. Disney reported earnings, and the earnings were pretty good, pretty decent. But the stock has fallen. Some argue the earnings were terrible. For me, I don't see anything different. I don't see anything different in the thesis, but it's Disney, right? And if you're looking at a daily chart on Disney, you see the volatility that it can be and the whipsaws that it can be. I'm not buying calls up here. I have my long shares. Before I went on vacation, I had sold a small portion of it. I sold 115 calls on a small portion of it. But that doesn't affect anything here for me. But overall, it's not something I'm playing calls on. I'm not playing puts on. I don't think there's a great technical setup right here with it. It could be argued that yesterday was a top. It definitely could be argued with the volume. But at the same time, we're not talking about volume that rivals even December, let alone historical volumes there for it. So personally, I think it's a bump in the road. I do think there is pullback risk, associated to it, just like anything. If it comes into the retracement areas, I'll look at it for short-term calls, but it's just one of those things where I don't see a lot of value, especially in buying something like a Disney ahead of earnings with the way the options are priced. They're just priced perfectly. Now, speaking of priced perfectly, Walmart. I was asked about Walmart this morning and, what I thought and where it would go and all of that. Well, Walmart has earnings upcoming. If you take a look at where the options are pricing in about a $4 move on Walmart's earnings. So if you go buy a straddle, decent straddle, you're looking for a $4 move to break even. Anything more? Great. Anything less? Ouch, right? For me, it's priced perfectly. There's a chance it has more than a $4 move. I mean, it went from 89 up to 97 right back here. But this monster move was $8, right? This monster move was $8. And if I get an $8 move with the way the options are priced, it's not necessarily going to pay off with the 800% gain. It'd be around 300%. So do I want to risk $4 on some sort of straddle? For me, I go, it's priced perfectly. With Disney, priced perfectly. And, you could just see what's happening to Disney options today. And I'll just pull them up here. But let's just come into the weeklies here. And yesterday Disney was at 116.5. So we'll look at the 116s. All right. And obviously the call options are going to go down. Right. The call options are going to drop. They were around 340 yesterday, traded as low as 260, and now they're 22 cents. So essentially they've gone the way of the dodo with a $2 move. I mean, it's only a $2 move, right? The 116 puts, I mean, those had to make money, right? I mean, the stock dropped. The calls went down so much that the puts have to make money, right? The puts are cheaper than what they were yesterday at the close. Yesterday at the close, the puts were over $2, and right now they're at $1.60. It's just the way earnings work with the implied volatility on the options and the suck out of that implied volatility. And it's just why, yes, I will play earnings from time to time, but I will only play earnings when I have gains that I'm willing to throw money into and when I have a setup that I look and say, you know what, the market's mispricing this. The market is looking at this wrong for one reason or another. And I look at it and I go, I could be right, I could be wrong, but this is one I'm willing to go after. And, I go after it. But most earnings are like Disney, where the calls and the puts both go down. And everyone looks and says, man, if I only had Facebook puts ahead of earnings, would have paid off huge, right? I mean, would have been a nice little home run. You pay $5 for the options, and they're worth $35, $40, right? But how often do you get this type of move? Right. The norm is for a move that actually takes both the calls and the puts down. For most stocks. Now, with small caps, not so much. But, when it comes to Disney, the options were priced fairly. We're seeing the options, come back to what they should be. Ultimately, long term, I do think this is a buy opportunity. I mean, you'd look at the weekly chart. As long as this consolidation, I mean, we have a nice little breakout that's happened. Here with Disney off of a multi-year consolidation. And so one that, could retrace right on back into this 108, 110, 111 area before moving on higher. But I looking at the way the fundamentals are, I do expect it to move on higher. At TLT, we talk about TLT here and there. I mentioned I'm looking for it for the challenge, but haven't gotten in yet. And yesterday, nice little move down, but I wanted to buy some puts into a rally here with it. Earlier today, I got an email asking about TLT and asking about a debit spread trade on it, where buying the 118 calls and selling the 120 calls. And so let's go take a look at this, and it's for August 24th. And so this is obviously with a bullish bias on TLT, which I don't quite have, but I don't have a massively short-term bearish bias. And this is short-term. Longer term, I have a very strong bearish bias, but this is really short-term. And so I'm pretty neutral biased, by me not being in it. But the idea here is to buy the 118s, okay, and pay about $1.50 here for them, and to sell the 120s and sell them for about 40 cents. So it's about $1.10 to $1.10 for the trade, just depending on how you get your fill price here. Okay, I'm going to round it to $1 for simplicity's sake. But what happens? Well, if TLT goes up, right? If TLT goes up $1, then your option for 154 is going to be worth what? Right? It's going to be worth $2, right? It's going to be worth $2 here. What's the 120 going to be? Well, it's going to keep on going up. So you're going to make some here, you're going to lose some here. If by expiration, right? If by expiration, the net value of this trade would be $1. Why? Because you would have the right to buy it at 118, the obligation to sell it at 120. So if you're able to buy that for $1 now, buying at 118, selling at 120 nets you $2. So your 2 minus 1, so your total profit is $1. So you have about 100% return on the trade. Not typically a ratio when it comes to spreads that I'm a fan of. I'd much rather see a 150, 250 type of return on a spread trade there with it. But, all that said, it's not as aggressive as some other spread trades out there. Is it a trade I would make? No, I wouldn't be comfortable with it. If I wanted to speculate a little bit on some further gain higher, I'd kind of look and say, okay, maybe what about a spread a little bit further out? Maybe the 119, 120. What are they going for? About 40, 50 cents. All right, it's still that kind of 2-to-1 ratio. And that's typical for TLT, to be in that ratio here with it. And then you just kind of have to ask yourself, okay, if I buy the 118s and it goes up to 120, all right, am I really making anything? No, it really isn't. So for me, there's just not a huge reward potential unless you're right in a really big way. And so I look at it and I say, well, if I'm going to be right in a big way, meaning I think something's going to happen, we're going to pop back up to these highs, I'm just going to play for that and put as little as I can on it and play for it. And what's a 121, 122 spread look like? What's a 120.5 to 121.5? The 120.5 to 121.5, maybe I can pick up for 15, 14, 13 cents. That would be worth $1 if the TLT went up to 121.5. right? So that's up here, 121.5. Now what I put in for 15 cents is now worth $1. For me, in the way I like to, set something like this up that isn't an investment, that's just more of a spec trade, that's kind of how I like to do it. But again, that's preference. I can't argue against buying the 118s and selling the 120s and running with that. I don't think there's a great stop area on the chart. So if you're the type of trader that needs a stop, based on the chart, I don't think there's one here that means a hill of beans out there, for the TLT, for the 20-year bond yield, and that's normal. That when you're trading bonds, that's very normal. You're not going to see off of these ETFs very good support resistance zones on a short-term basis. You'll see them, overall, there's a nice little support area right down here in this 116, 117 area, right? But to go 118.22 or something, it's just not very realistic there with it, okay? But anyway, personally, I like selling bonds after a rally, but I think it's one of those things where if you want to hedge in this market and, you want a strong hedge in this market against, what can happen in August, TLT upside is not a bad way to go at all. In fact, let me come in here. I haven't looked at this. Let me just see here. I'm just curious. August. Let's go over the last 10 years. August TLT has been up 50% of the time, but you can see its average gain is 2.3%. So it's by far the biggest gaining month seasonality wise. TLT goes up in August more than any other month, but it's not as consistent, meaning it's only gone up half the time. It's gone down the other half of the time. So what does that mean? When it goes up in August, it tends to move big. Tends to move a heck of a whole lot. Let's go take a look at how much of an outlier 2015 is. Let's just come in here to a monthly. And we can come in 2015, August. Yeah, wow, this is zoomed in a little too much. Let's come in here and clean this up and get a view that we can see a little bit better. But if we look at August of 2015, right in here, we look at August of 2016, kind of flat to slightly down. August of 2017, slightly up and then down. So there's not been a huge pattern. We have the one outlier right here. And then August of 2014 down, August of 2013 up. So, again, it does look like this outlier is definitely affecting the data. So for me to look at that seasonality chart and say, ooh, August always goes up big, I just can't. I just can't. Yep. There is past history of TLT going up big in August, but you take out 2015 and the data looks just like every other month there with it. So anyway, my 2 cents there on TLT. Now, last but not least, I want to go and take a look at the question, did Valero die? And one of you, Charles, I'm going to call you out on that one. Sorry. I love you, man. But, yeah, Charles sent me one and said, did Valero die this morning? And I just sent back. I said, hey, depends on what your perspective is here with it. And let's go take a look at it. All right, let's go take a look at it. Valero down about $1.14 here today. Down about 1%, right? It opened here and it's pretty much stayed here. The XLE is down about 1%. We have oil down about 3.5%. So oil has rolled over big here today. UGA gas is down 4%, right? So we have, the crack spread tightened a little bit, and that's not a positive for Valero, so we'd expect Valero to be down on that day. But I go and I look at Valero and I say, okay, here we are. What's my trade? Well, I wanted to see what? I wanted to see that yesterday's lows hold. Have they held? Yeah, they've held so far. We sell off a little bit into the close. I'm not as comfy. But what happened? We gapped down below the 7-hour moving average. And what's the first thing I know? not to expect much from it today. So on my expectations for today, yeah, I have no expectations on the day. And it's as simple as, okay, if it holds on to yesterday's lows, I have a decision to make. Do I want to hold it or do I want to sell it? If I hold it, it could gap down and, put me in a worse situation. But overall, most likely I will hold it if it holds on to these lows and look to ride it further. I don't have, a monster type exposure or something like that. But, it is something where personally I added a little bit here today. To Valero. I don't have a massive position, but added a little bit here to it. And, I'm not going to do it for the challenge. I don't want to, right with how the exposure is, I don't want to add any more there. But, whether this thing rallies 50 cents into the close and, or sells off, rallies 50 cents into the close and then sells off 60 cents, it's meaningless. It doesn't mean a hill of beans from a technical standpoint. Here on it. So I have to look at it and go, okay, what's my exposure? What's my risk? What's my reward? What could this do? So I have no expectations on the day. Did it die? Yes, died for the day. But ultimately, I have expectations that this still goes up into the 120, 122 area. It's one where, even looking at the daily chart, I mean, what's changed? Yep, we got that move above the 7, and it didn't get followed through here today. But look at the volume. Are they selling it with any sort of aggression today? No. I mean, the volume is going to end up being 3/4 of what it was yesterday. And so, yep, it could still have further down, and that's always a risk. But for me, the question of did Valero die is is one that depends on your perspective, right? And as far as for me and a risk that I'm willing to take, yeah, absolutely, I'm willing to take it right here and, willing to run with it. I'd love to see it rally $5 into the close and, make everything feel good. But, at the same time, I'm not risking, all that much here for it. And the reward potential on it is still pretty massive. In fact, a little bit better here today than what it was yesterday. Okay, but it's Valero. Valero is a wild one. Always has been. Always looks smooth in hindsight, right? Always looks really smooth. But once you're in the trade, you realize the sucker moves, in $2, $3, $4 intervals. Yeah, it could be a little bit of a wild one for some. Okay. So anyway, that's my thought there. There's not a lot out there that I look at today and I say, wow, this would be a really cool setup. Or this is a really nice setup. A lot of it I look at and go, okay, that's nice. I mean, we had Caterpillar yesterday. Nice move, right? Big, nice move back. Okay. One day's leader, next day's laggard. One day's laggard, the next day's leader. And that's the way a lot of this market has been. There's some life in tech here today. But one that I've kind of been eyeing is Micron to see if it breaks above yesterday's highs. So far, it hasn't here today. There's been some pretty interesting call activity on something like an Alcoa today, which is breaking above the highs for the last 3 weeks in a very interesting type of position. But we saw AT&T yesterday break above its highs for the last week and holding on there very nicely. There's some positive action in several areas. And then there's Nike, which, this is one where you just kind of have to close your nose and buy in as it's running up the band. But not something I'm willing to do for the challenge here. Just this little weekly challenge here just yet. Okay. Alrighty. Well, thanks for hopping on. Any other questions, please let me know, and we'll talk to you later. Take care.